ExamPrep.School. WA Disability Insurance Producer Exam. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Accidental and health insurance basics, disability income and related insurance, federal tax considerations for health insurance, general insurance concepts, group health insurance, individual accident and health policy general provisions, insurance regulation, medical plans, specialized health insurance for qualified individuals. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Washington State Disability Insurance Regulations, pure risk is characterized by which of the following scenarios? A. A risk involving only the possibility of loss or no change. B. A risk offering both potential profit and potential loss. C. A risk undertaken primarily for investment gains. D. A risk assumed voluntarily with predetermined costs. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is a risk that involves only potential loss or no change, which aligns with the definition of pure risk as having no opportunity for gain. Reason B is not correct. This describes speculative risk, which includes opportunities for both profit and loss. Reason C is not correct. This refers to speculation or investment risk, not pure risk. Reason D is not correct. Voluntary assumption of costs is not a defining feature of pure risk. Question 2. In health insurance coverage, speculative risk is differentiated from pure risk primarily because speculative risk A. Arises only when events cannot be predicted by an insurer's models. B. Carries both potential gain and potential loss. Pure risk carries only potential loss or no change. C. Is generally excluded from health policies, unlike pure risk, which forms their basis. D. Results solely from voluntary actions, whereas pure risk stems from accidental events. The correct answer is B. The correct answer is that speculative risk carries both potential gain and potential loss, whereas pure risk involves only the possibility of loss or no change. Reason A is not correct. Predictability to an insurer's models is unrelated to the distinction between pure and speculative risk. Reason C is not correct. Pure risk is the basis of health policies, but speculative risk is not universally excluded in every context. Reason D is not correct. Speculative risk is not defined by voluntary actions, but by the chance of gain or loss. Question 3. 2 trucking companies are insured under identical collision policies. Company X operates 40 trucks averaging 20,000 miles annually, while Company Y operates 60 trucks averaging 10,000 miles annually. Both fleets face similar driving conditions. Based on the relationship between risk exposure and probability of loss, which company's fleet has a higher probability of filing a collision claim next year? A. Both fleets have equal probability. B. Company Y. C. Company X. D. Cannot be determined without information on claim severity. The correct answer is C. Probability of loss is directly related to exposure measured in total vehicle miles. Company X's total, 40 multiplied by 20,000 equals 800,000 miles, exceeds Company Y's, 60 multiplied by 10,000 equals 600,000 miles. So Company X has the higher probability of a claim. Reason A is not correct. Total exposure differs between fleets, so their probabilities are not equal despite identical policy terms. Reason B is not correct. Company Y has more trucks but fewer total vehicle miles, resulting in lower overall exposure and thus a lower probability of loss. Reason D is not correct. Severity information is not needed to assess probability. Exposure measured by vehicle miles is sufficient. Question 4. Under Washington state law, an insurable interest in a person's health for a new health insurance policy must exist at which point? A. When the insurer conducts the claim investigation. B. At the policy inception date. C. On the date the first premium payment becomes overdue. D. When the policyholder submits a claim for benefits. The correct answer is B. The law requires that insurable interest be present at the policy inception date to ensure the applicant has a legitimate interest in continued health at the start of coverage. Reason A is not correct. Insurable interest is not established during a claim investigation, but must be in place when coverage begins. Reason C is not correct. The premium due date does not determine insurable interest. The requirement occurs before coverage starts. Reason D is not correct. Insurable interest cannot be established at the time of claim filing. It must exist when the policy begins. Question 5. Which of the following is a valid example of insurable interest in an applicant's health under Washington regulations at the time a health policy is issued? A. A nonprofit lender insuring a borrower for the unpaid principal balance. B. A coworker purchasing coverage on a colleague without financial ties. C. A distant cousin acquiring a policy on a family member's health. D. A landlord insuring a tenant's health without a debt obligation. The correct answer is A. A lender may insure a borrower's health up to the unpaid principal balance because the lender faces financial loss if the borrower becomes incapacitated. Reason B is not correct. A coworker lacks a financial or legal stake in the colleague's health, so no insurable interest exists. Reason C is not correct. A distant cousin does not create a sufficient financial or legally recognized interest under state law. Reason D is not correct. A landlord does not have financial exposure to a tenant's health, absent a debt obligation. Question 6. Which characteristic most accurately distinguishes how stock and mutual health insurance companies raise capital and surplus? A. Stock insurers authorize policyholder votes on corporate matters, while mutual insurers do not. B. Mutual insurers issue policy dividends that are taxable income for policyholders, unlike dividends from stock insurers. C. Stock insurers raise surplus primarily through retained earnings and policyholder contributions, whereas mutual insurers raise capital through public stock issuance. D. Stock insurers raise capital by issuing shares to investors, whereas mutual insurers accumulate surplus largely through retained premiums and policyholder contributions. The correct answer is D. This option is correct because stock companies generate capital by selling shares to investors, while mutual companies build surplus from retained premiums and contributions from policyholders. Reason A is not correct. The distinction involves capital sources, not voting rights, and both types may involve policyholder participation in governance to varying degrees. Reason B is not correct. Tax treatment of dividends varies by policy and jurisdiction, not by company structure, so this does not define capital-raising differences. Reason C is not correct. This choice reverses the roles of stock and mutual insurers in capital raising and surplus accumulation. Question 7. A producer is advising the Olympia Fraternal Benefit Society, which is organized under a lodge system, and plans to offer disability income coverage to its membership in Washington. Which of the following statements regarding fraternal benefit societies offering disability insurance in this state is correct? A. The society may issue disability insurance contracts to any state resident once it has a certificate of authority. B. The society may distribute profits from disability premiums to select members as dividends. C. The society must limit disability coverage to dues-paying members and maintain its lodge system structure. D. The society must register with the state's Insurance Guarantee Association before issuing disability policies. The correct answer is C. The correct answer is that fraternal benefit societies must limit disability coverage to dues-paying members and maintain a lodge system. These societies operate as non-profit organizations, providing benefits exclusively to their members through a structured lodge mechanism, unlike commercial insurers. Reason A is not correct. While all insurers need state approval, fraternal societies are restricted to selling only to their members, not any resident. Reason B is not correct. Fraternal benefit societies are organized on a not-for-profit basis and cannot distribute profits as dividends to individual members. Reason D is not correct. Fraternal benefit societies are generally exempt from state guarantee association requirements and do not register with it. Question 8. Which of the following accurately distinguishes an accident-only health policy from a sickness-only health policy? A. An accident-only policy covers medical treatments for injuries caused by unforeseen external events, whereas a sickness-only policy covers illnesses or diseases. B. An accident-only policy limits benefits to hospitalization needs, while a sickness-only policy provides only outpatient services. C. An accident-only policy provides benefits for both injuries and illnesses, whereas a sickness-only policy covers only diseases. D. An accident-only policy applies only to workplace injuries, while a sickness-only policy applies to non-occupational illnesses. The correct answer is A. The correct answer is that accident-only policies are designed to cover injuries from external events, while sickness-only policies cover illnesses or diseases. Accident only excludes disease treatment, and sickness only excludes accident injuries. Reason B is not correct. Medical treatment under accident-only policies is not limited to hospitalization and sickness. Only policies are not limited to outpatient care, making this statement inaccurate. Reason C is not correct. Accident-only policies do not cover illnesses. Including diseases makes this statement incorrect. Reason D is not correct. Accident-only policies are not restricted to workplace injuries. They apply to all covered accidents. Question 9. In disability insurance contracts, what best defines the term accidental bodily injury? A. Physical harm resulting from an unforeseen external event, independent of disease or illness processes. B. Harm arising from repetitive stress over time, such as carpal tunnel syndrome. C. Injury caused by intentional self-harm or willful misconduct of the insured. D. Any bodily damage occurring during a covered illness or medical procedure. The correct answer is A. The correct answer is physical harm that arises from an unexpected external event and excludes injuries caused by disease processes, intentional acts, or medical treatments. Reason B is not correct. Repetitive stress injuries develop gradually and are excluded from the definition of accidental injury. Reason C is not correct. Injuries from self-harm or intentional acts are specifically excluded from accidental injury coverage. Reason D is not correct. Damage from illness or medical procedures does not meet the criteria for accidental bodily injury. Question 10. A policy defines accidental bodily injury as bodily injury caused by external, violent, and unintentional means. Which of the following scenarios illustrates an accidental means event as defined by this policy? A. Twisting a knee while dancing. B. Straining the back while lifting a heavy box. C. Fracturing an elbow by running into a stationary pole while jogging. D. Injuring a wrist while deliberately catching a falling pot. The correct answer is C. The correct answer illustrates an external, violent, and unintentional force causing injury, which aligns with the policy's accidental means definition. Reason A is not correct. This scenario results from an intentional body movement without an external force, so it does not meet the accidental means definition. Reason B is not correct. This injury is due to a lifting exertion rather than an external violent event, so it does not qualify as accidental means. Reason D is not correct. This injury occurred during a deliberate action rather than from an external violent cause, so it is not covered under accidental means. Question 11. After consuming multiple alcoholic drinks at a bar, Jackson rode his bicycle home, lost control, and fractured his arm. Under common exclusions in an accident and health insurance policy, which exclusion clause would most likely lead to denial of this claim? A. Injury from self-inflicted harm. B. Injury sustained while intoxicated. C. Injury due to declared or undeclared war. D. Injury from routine work duties. The correct answer is B. This scenario involves injury sustained while intoxicated, which is a standard exclusion in accident and health policies. Reason A is not correct. There's no evidence of intentional self-harm, so the self-inflicted harm exclusion does not apply. Reason C is not correct. The incident did not occur in a war or military context, so the war exclusion is not relevant. Reason D is not correct. The injury occurred during personal activity, not from work duties, so the occupational exclusion does not apply. Question 12. In disability income insurance, the elimination period refers to the A. Initial underwriting phase before coverage takes effect. B. Time from policy issuance until coverage becomes active. C. Interval between the onset of a disability and the first benefit payment. D. Period after benefit payments end and before policy renewal. The correct answer is C. The elimination period is the waiting interval between the occurrence of a qualifying disability and when benefit payments commence under the policy. Reason A is not correct. That phase describes underwriting prior to issuing the policy, not benefit timing. Reason B is not correct. This describes a probationary or waiting period for coverage activation, not the elimination period after disability onset. Reason D is not correct. This describes a gap after benefits end, whereas the elimination period precedes initial payments. Question 13. How does extending the elimination period affect the premium cost of a disability income policy? A. Increases the premium cost to the policyholder. B. Decreases the premium cost to the policyholder. C. Leaves the premium cost unchanged. D. Requires additional riders that increase the premium. The correct answer is B. A longer elimination period lowers the insurer's exposure to early claims, reducing the risk and allowing for a lower premium cost. Reason A is not correct. Longer waiting periods actually reduce risk exposure, so premiums do not increase. Reason C is not correct. Changing the elimination period directly alters risk and premium, so cost would not remain static. Reason D is not correct. Extending the elimination period does not mandate additional riders. It itself lowers the insurer's short-term liability. Question 14. A policyholder purchases 2 disability income policies with identical monthly benefits of $3,000 but different maximum benefit periods. Policy X provides benefits for up to 18 months, and Policy Y provides benefits for up to 48 months. Assuming continuous total disability, how much greater is the maximum total payout under Policy Y compared to Policy X? A. $45,000. B. $60,000. C. $72,000. D. $90,000. The correct answer is D. The correct answer is derived by calculating the difference between the two maximum payouts. 48 months multiplied by $3,000 equals $144,000, and 18 months multiplied by $3,000 equals $54,000, yielding a $90,000 greater maximum payout. Reason A is not correct. This value represents the payout difference if an incorrect period length were used, making it too low. Reason B is not correct. This amount results from miscalculating the month difference as 20 months instead of the actual 30 months. Reason C is not correct. This figure corresponds to an erroneous calculation based on a 24-month versus 18-month comparison rather than the given periods. Question 15. An employer offers two disability income plans. Plan A is an STD policy with a 15-day elimination period and a 26-week benefit period. Plan B is an LTD policy with a 90-day elimination period and benefits payable up to age 65. Which of the following correctly contrasts these plans? A. Plan B's waiting period is shorter, resulting in earlier benefits than Plan A, despite a longer overall benefit period. B. Plan A's benefit duration typically extends to age 65, while Plan B's benefit period is limited to 26 weeks. C. Both plans commonly feature a 90-day elimination period, but differ in how benefit amounts are calculated. D. Plan A has a shorter elimination period and a defined weeks-based benefit duration, whereas Plan B has a longer elimination period with a benefits duration extending for years. The correct answer is D. The correct answer identifies that STD plans generally begin benefits sooner and pay for a limited number of weeks, while LTD plans start after a longer waiting period and can pay benefits for several years. Reason A is not correct. This mistakenly asserts that the LTD plan has a shorter waiting period than the STD plan, which is not true. Reason B is not correct. This reverses the benefit period limits between STD and LTD, which contradicts standard policy structures. Reason C is not correct. This incorrectly states an equivalence in elimination periods that is not typical of STD and LTD plans. Question 16. Under a typical accidental death and dismemberment AD and D rider, which of the following losses would be covered? A. Loss of income due to a disabling injury. B. Accidental death resulting from a stroke. C. Medical expenses incurred from a fractured wrist. D. Permanent loss of hearing in both ears. The correct answer is D. A standard AD&D rider provides benefits for accidental death and specified dismemberment losses, such as loss of hearing, but does not cover income loss, illness-related death, or medical expense reimbursement. Reason A is not correct. Income loss benefits are provided by disability income policies, not by AD&D riders. Reason B is not correct. A stroke is considered an illness-related event and typically is excluded from AD&D coverage. Reason C is not correct. Medical expense reimbursement is a feature of health insurance plans, not AD&D riders. Question 17. A client holds an accidental death and dismemberment policy with a $120,000 principal sum. Under the schedule of losses, loss of one hand pays 50% of the principal sum, and loss of sight in one eye pays 50% the principal sum. If the client loses his right hand and the sight in his left eye in the same accident, how much will the insurer pay? A. $180,000. B. $60,000. C. $120,000. D. $240,000. The correct answer is C. The schedule assigns 50% for one hand and 50% for one eye, totaling 100% of the principal sum. Therefore, 100% of $120,000 equals $120,000. Reason A is not correct. This incorrectly treats the two 50% losses as additive over the principal sum 150%. Reason B is not correct. This reflects only one scheduled loss 50%, but both losses must be combined. Reason D is not correct. This applies a 200% benefit that exceeds the policy's principal sum cap. Question 18. Which of the following is a required component of the insuring clause in an accident and health insurance policy? A. Conditions under which the policy may be reinstated. B. Identification of perils covered by the contract. C. Specific grace period for overdue premiums. D. Statutory disclosures and definitions section. The correct answer is B. The insuring clause defines who is covered, what perils are insured against, the policy period, and the coverage amount. It does not address reinstatement rules, grace periods, or statutory definitions. Reason A is not correct. Reinstatement conditions are found in the reinstatement provision, not the insuring clause. Reason C is not correct. Grace period requirements are located in the grace period provision, not within the insuring clause. Reason D is not correct. Statutory disclosures and definitions appear in separate policy sections, not as part of the insuring clause. Question 19. In an individual health insurance policy, what is the primary purpose of the free look provision that begins upon policy delivery? A. Allows the policy owner to review the contract and return it within a specified period for a full refund. B. Provides an additional window to reinstate coverage after a premium payment lapse. C. Extends coverage beyond the expiration date under certain conditions. D. Grants the insured the option to convert a group policy to an individual policy without underwriting. The correct answer is A. The free look provision grants the policy owner a set time frame after delivery to examine the contract and cancel it for a complete premium refund. It is not intended for reinstatement, benefit extension, or conversion rights. Reason B is not correct. Reinstatement after a lapse is governed by the reinstatement provision, not the free look period. Reason C is not correct. Coverage extensions past expiration fall under extension or grace period clauses, not the free look provision. Reason D is not correct. Conversion rights are separate policy options and unrelated to the free look refund period. Question 20. Jorge applied for a comprehensive health policy and completed an application that included a supplemental questionnaire regarding mental health benefits. Upon policy delivery, the insurer provided Jorge with the signed policy document, a copy of his signed application, a mental health benefit rider, and a later endorsement modifying benefit limits. When Jorge submits a mental health claim, the insurer denies that the supplemental questionnaire is part of the contract. Referencing the entire contract provision, which documents properly comprise the entire contract between Jorge and the insurer? A. Policy document, signed application, all riders, endorsements, and attached papers. B. Policy document and any endorsements issued before delivery only. C. Policy document, signed application, and the supplemental questionnaire only. D. Policy document, signed application, supplemental questionnaire, and claim forms. The correct answer is A. The entire contract provision specifies that the health insurance contract consists of the policy document, the application, and any riders, endorsements, and attached papers. This ensures all contractual terms, including supplemental questionnaires, are binding. Reason B is not correct. Omits the application and attached papers and incorrectly limits endorsements by timing. Reason C is not correct. Excludes riders and endorsements, which are part of the entire contract under the provision. Reason D is not correct. Includes claim forms, which are not part of the contract, rather than attached papers only. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.